interesting call which came from Jefferies. Mahesh Tendulkar has written about it, and he said that, they were cautious in the markets. They had turned cautious in the markets in September. But now, and they had said that in September that we will increase our cash position in our model portfolio. Now, slowly, they're saying that we will start allocating that cash. We're looking to deploy the cash that we've built on the book. The reasons are that macro concerns are abating. One, the US 10-year yield has come down by nearly 60 basis points from the peak. Two, crude prices have behaved irrespective of what's happening in Middle East. In fact, the correction in crude leaves room for the retail auto fuel, that's petrol prices, to be lowered, which is positive for consumers and spending. And thirdly, they're saying the on-ground feedback about BJP's performance in the state elections could actually be better than what the market is penciling in. So he's like, if that takes place, then perhaps markets could see a little bit of a bounce after the results on 3rd of December. That's just, next week. And finally, on valuations, he says India's relative valuation premium to emerging market is 63%, which is in line with the historical average, and therefore it can sustain. So that's the reason, because the macro picture is a lot better than it was in September, and therefore they're looking to redeploy the cash that they built up.
Some of the cash. Actually, I want to talk to you more about that. They've announced a couple of portfolio changes, including, by the way, they're buying into Honasa. Pull up that stock. Honasa today is up another 10-11%. Week to date, Honasa is up 40%. I mean, what a move this has been post the listing. That's 11%. Let's pull up the week to date if we can, or even a 1 month. I mean, it's been a fantastic rise for the stock soon after the listing. So coming back to the portfolio changes at Jefferies, what's in, what's out? Just tell us more about this, Reema.
So let's start with Marico and Honasa. So what Jefferies is doing, they're replacing Marico with Honasa. They're saying Marico has delivered well on margin expansion for the last few quarters, but the volume growth due to its rural exposure has been weak. On the other hand, Honasa Consumer is delivering a strong top-line growth. They've guided for a 30% plus revenue growth even in the second half of the year, steady margin expansion, and it caters to a much premium consumer, which is relatively unimpacted by the inflation and the demand slowdown. So which is why they've decided to replace Marico with Honasa. But that's not the only change that they are effecting. So let's start with Maruti is replaced by Eicher Motors. They're saying between two-wheelers and four-wheelers, they expect two-wheelers to do better, and Eicher Motors has been an underperformer due to the competitive reasons, the launch of Harley, Triumph, etc. So Eicher Motors has underperformed, and therefore they think it makes sense to buy that. Secondly, they're replacing Power Grid with NTPC. They're saying both are attractive plays on the India power story, but NTPC's EPS growth at 10% is expected to be higher than Power Grid's EPS growth of 6%. And therefore, they prefer NTPC over Power Grid. We spoke about Marico and Honasa. They've added Coal India. They've increased the weightage, I think, by plus 3 percentage points. They're saying the volume growth has improved, valuations are attractive, and it's a dividend-paying company. The dividend yield is about 7 to 8%. And finally, on the financials, they're bringing down their weight on NBFC because the rate cycle still seems to be some time away. So they're reducing their weight on NBFC, and they're replacing it by topping up exposure to ICICI Pru Life and HDFC Bank. And again, because the valuations are attractive here.
Okay, so that's the Jefferies story, why they're raising their holdings in India, recommending deploying more cash in India, and of course the stocks that they like as well. Let's go ahead then.